So RBA becoming a bit of an outlier, right? So how much of this is not so much because of headline inflation, Paul, but specifically because of what's happening to housing, which constitutes about a fifth of the CPI basket?
Yeah, so mostly you've got to look at the core inflation measures, as you say. Headline inflation, actually, we think when we get the CPI indicator tomorrow, will start to come down a bit faster because of some government subsidies. But the core measure of inflation is still well above the Reserve Bank's target. It's coming down very, very slowly at this point in time. So I think that the way to think about this is Australia is in a different spot, and it's for a few different reasons. One of them, at least, is the RBA didn't lift interest rates as much as everyone else to start with. They lifted rates by 425 basis points. The Fed, of course, did 525, and most of the G10 central banks did more. So they didn't lift interest rates quite as much. We haven't had inflation come down as much. And then another factor is that, well, productivity in Australia has been really quite weak. And so, you have had less of a slowdown in demand, less of an improvement on the supply side of the economy, and that's left us with inflation that's proving to still be quite sticky.
But Paul, if housing is the issue here, that's not really a job for the central bank, is it? It sort of argues more for macroprudential measures to cool things down, no?
Well, so the housing issue here is that we've got a real shortage of supply of housing. And so when we reopened our border, we had a surge in inward migration, but we haven't been able to build enough housing to keep up with it. So we've had very, very low rental vacancy rates across the country. Rents have been rising very quickly as a result of that. And because you've got this shortage of housing supply and you haven't been able to bring on enough supply, it's a persistent feature that those rents are rising too quickly. That's contributing to inflation. So the real solution is to bring more housing supply on. But the difficulty at the moment is the economy hasn't really been able to bring on more housing supply. And that goes to the point I was making a little earlier about productivity, that we just haven't been able to deliver on the supply side, and housing is one feature of that. So it's not so much house price growth that we're concerned about, it's rents and the shortage of housing that's contributing, therefore, to elevated inflation.
Good day, Paul. Is this going to be a hawkish hold, and at what point in the cycle will the RBA have to consider cutting?
Well, I think it will be a hawkish hold. We think they're going to both hold steady today and tell us that they had discussed at the board meeting the possibility of lifting rates today, but we don't think they'll actually do that, like they have been doing over the sequence of meetings we've seen over the last few. So we think that it is going to be a hawkish hold. We don't think they're going to be in a position to be able to consider interest rate cuts in Australia until well into 2025, because it is proving to be the case that inflation is proving to be sticky. We think we're going to need a longer period of weak growth or weak demand in the economy to get inflation to come down back towards the RBA's target. And we're still going to need quite a bit more of that weak growth, we think, to convince the RBA that there's enough downward momentum in inflation to get them to deliver cuts. So we don't think there's a cut coming until the second quarter of next year, which of course means that Australia is, as I said at the beginning, in quite a different spot to what we're seeing, around the world with other G10 central banks, particularly in a different spot to the Fed.